This is a new webinar, a Q&A session for October 9th, 2019. So, my pleasure as well, Bertinho. Second webinar, great. Hope that you like this one as well. Okay, good. So, you know how this one works. We are gonna go over some assets, Forex, stocks, anything, and you will be able to ask any questions. I have some questions that I have received and in my email, sorry. And I also have some scenarios I would like to go over. And as I do present these scenarios, you will be able to ask questions about it. Just please, Bertinho, do you have a question? Please ask me. Okay. Then what is the question? You are asking about the high time frame, not 2 to 1. What does that mean? There's no question there. If it is not 2 to 1, you need to wait for confirmation. Everything's down, not 2 to 1, confirmation. If the imbalance does not reach a minimum of 2 to 1, the width as wide or twice the width of the imbalance, the distance from the proximal to the distant line, then you need to wait for new levels of imbalance as confirmation within that impulse that did not make a 2 to 1 imbalance. If it keeps on working, that's it. Sometimes it works, my friend. Sometimes, but many times it doesn't. Rules are 2 to 1. You can tweak the rules and say, okay, I'm waiting for a 1 to 1. But if you are to start waiting for 1 to 1 or 1.5 to 1, then the strength of the impulses will be weaker and weaker, and you will be losing many of them. So just stick to the strength of the impulse minimum 2 to 1 imbalance, okay? Or test this scenario with smaller imbalances or not that strong. Make sense? I just can tell you the rules are 2 to 1. That's what I've tested. I know some traders in the community that use a minimum of 3 to 1, so it's up to you. Cisco was like that. By any chance, can you explain that chart? Okay. I'm gonna take a look at Cisco. I'm gonna add it here. You mean Cisco the stock? Continue. Okay, good. So I'm gonna go over it, the second one after this index. Okay. If anyone has any other question, then just ask in the chat box, and I will add it to the list here. As you can see on the right side. I want to go over all of this if there is time. Okay. Okay, Bertinho is David. Okay, David De Brito. Okay, great. Now I know you, my friend. I didn't know who you were. Okay, good. So I'm going to start with the Australian index because a member of the community, Lion89, was asking a couple of questions about these over here. Okay, so I want to go over it so you can answer his doubts in a more detail. Okay, so I'm going to start by cleaning up this chart, and we're going to be focusing on one sec. We're going to be focusing on this one over here, on this price action. So first of all, I'm going to zoom out because this is all-time highs. Okay, that was a trend line that was broken. Okay, and there was an imbalance created there as well. So we have that imbalance eliminated over there. Okay, that one was eliminated. Good. So let me ask you a question. That was the imbalance eliminated, so I'm going to just draw a line there. Okay, so we can see the distal line and learn which is the one responsible for eliminating that area. So I'm going to ask you, I'm going to do this one sec. I'm going to use this because I'm using the new indicator that I'm testing, but it doesn't work that well sometimes. Just I'm using an indicator, an adapted, a modified indicator that will filter fail ERC, but it just can't do it 100%. So this is a basic candle. Okay. So my question is, if the distal line of this monthly supply was at that blue dash line, okay, what is the imbalance responsible for eliminating that one? Where does it start? Here, there, or there? So we have This one, we are going to call it 1, this 1, 2, and this one, 3. So what would be your answer? Which is the one responsible for eliminating the supply area whose distal line is right there? Anwar says number 3. Frederick, Britinho, now Anwar 3 again. J, 1. It is 1. Okay, it is 1. 3 can be. Why? Let me explain to you. Remember that a basing candle cannot eliminate any opposing area. We have any imbalance is made of a legging, a pause, and a leg out, or a legging and a leg out, or a valley, or a drop rally, or a rally drop. Okay, so it is the leg out that eliminates the imbalance, not the basing candle. The basing structure is the basing. We have the basing candles here, okay? And once price departs, it is this impulse that is responsible for eliminating any opposing area that we have on the left side of the chart. Make sense? It is not the basing candle. It is the impulse. Good until there? Okay? It's the impulse that eliminates that. So if we take a look at this price action over here, where is the closest basing structure that could be part of an imbalance? It is right there. We can see the dot in the middle of the candlestick. So here we have the basing structure. Okay, so we have the legging should be an ERC, the basing, and the leg out. So we have legging, basing structure, leg out. So this ERC candle here at the top is the one responsible for eliminating the monthly supply zone that we could see far back in time, dating back to, I don't know, the Jesus Christ era, okay? Long time ago. I don't know when, years ago. So the one responsible for eliminating that area is this one, okay? That is the area. Month is in an uptrend. So we're gonna do now the Debbie is laughing because I said that about Jesus Christ, maybe. I guess it's that. So here we're gonna be using the trend line rules, the chain analysis. So we have, this is a valley, and this is another valley, and this is another valley, and all that. But we have to connect the latest two. So if we connect these two, the trend line is definitely broken by this full candle. So there was an area of supply right there. So if we have an area of supply right there, then, okay, which is the candle or the impulse responsible for eliminating that one? So let me point that out. Does it start there, there, or there? So we have 1 again, 2, and 3. So which is the one responsible for eliminating that area of supply? Number 2, everyone says number 2, number 2, number 2. Correct, number 2. Why? I explained it already. So if this is the distal line, okay, a basing area cannot, a basing structure, basing candle cannot remove the opposing area. The imbalance, it is the ERC, the impulse that eliminates. So this is the imbalance right there. Since we have a single candle at the base, we can draw the imbalance like that as well. Both. The distal line can be located at the open or the close, because this is a doji, or at the high of the basing candle. Okay? Wick to wick, exactly. David. So, but if we had, now let's do something else. Because Lion89 was asking about this, that if we draw the level like that with the proximal line there or there, then it changes everything, because if we draw it like that, then it consolidates away, and if we draw it like this, then we don't have the consolidation away in the impulse until there, and it could change the whole analysis. So my answer to him was that it doesn't really matter if the level is drawn like this with the proximal line at 1 or at 2. Why? Because the strength of the impulse is poor. Only one ERC candle. Make sense? So it doesn't really matter. It doesn't change the outcome of the analysis and the chain analysis because it only has one ERC candle and not even 2 to 1 either. Okay? You could say, okay, one ERC candle, 2 to 1. Okay, I'm going to take the risk, but it doesn't even accomplish that. Okay? So if I'm going to draw now this. This is an area of demand, and let me draw this one over here as well. So if you had to score and where can a demand area be drawn at the pin bar at the valley also as being the origin of the move? Here, no, can't draw that there because what do we need? Anyone in the chat room now? What do we need this impulse to accomplish in order to become an area of demand? There are only two. Remove supply. Did that impulse remove supply? Supply is here, okay? We already know that this one is the one responsible of eliminating the area of supply. So this one cannot be, okay? So is there any trend line break? In order to become demand, it needs to break a bearish trend line, as Davi pointed out. Was there a bearish trend line broken? No. So this cannot be demand. It is an impulse. And that's the difference between an imbalance and an impulse. You will see many impulses on the chart, and some of them accomplish something and others will not accomplish anything at all. So only the ones that accomplish something will be tradable if the sequence and the scoring is high. Okay, if it meets the sequence criteria using in the sequence that you're using, and if it scores high, the basing structure is good, the strength of the impulse, the freshness of the level, blah blah blah, and all that. Okay, we need all that in order to have the level confirmed. So now but what we have here is a very strong impulse that can be used as confluence because it's made of a bearish engulfing, bullish engulfing pattern. So when price reaches that area, if it ever reaches that area, we will not be able to go short when price is around there because it's very low against a very strong impulse. And since this is a single candle at the base, then the range of attraction, the aura of this level, we could say, is wider than normal. Okay? Make sense? All good? So this is the one area of demand responsible for eliminating the opposing area. And that's why if I go back in time here, I remove the levels that I had, that I have drawn, and go back to the origin. I think I've lost it or not. The undo, how many undo levels does this one have? Otherwise I'm going to have to draw everything. So I think I lost all the levels that I drew. But it doesn't really matter because I'm going to draw it like this, as always, there. So that's what we have really. This is the uptrend monthly demand in control. Make sense? Make all this make sense, Anwar and everyone? Okay, good. There will be many times, like I said, where an impulse we have price reacting to the impulse, and that's it. But it's not an imbalance as per the rules. So try to focus on the most likely on the levels that have higher probability as defined by the rules and not on the exceptions. So there are many assets, indexes, forex, cross pairs, stocks, bonds, CFDs. There are thousands of assets. So do not just plan or have a watch list of maybe 20, 30 forex crosspair. There are many assets. So focus on those levels that are really good. Okay. So in this case, on the S&P ASX 200, the index, Australian index, we have weekly area of supply, too high, weekly area of supply in control, brand new levels of supply being created for shorts. One area of supply here in the 4 hour and an early area of supply for shorts because we have weekly consolidating, so this is high in the range, new levels as confirmation, so longs, shorts are possible, longs are not possible. For longs, we need price to drop down here, rebound again, and give us new areas of demand, like as it happened here. This was a valid trade a few weeks ago that I believe, I don't know if Lion 89 took it, but I think Kiwi Forex took it, Kevin from Indonesia. Remember that? Good evening, Gopi. Let me remember you. Price monthly in an uptrend, weekly area of demand set on focal level, 2 ESC candles, very strong imbalance on the monthly, scores high, the monthly and the weekly, so that was a valid trade. If you miss the level, then you've got the trend line break and an area of demand on the daily as confirmation with 2 ERC, okay? And then another area of demand that was tested there, so 2 entries plus the set and forget entry on the weekly, 3 entries on this scenario. Make sense? This was explained in the community and on the video analysis that I do every single week, okay? I'm just going over the rules. Any questions about this one? So we can go to Cisco. Oh, Jay, if the monthly, weekly, in the monthly, if a monthly sequence, monthly, weekly, sorry, if I am in a monthly, weekly, daily sequence, can I use 4 hour as my entry? Oh, you said it yourself. You are in a monthly, weekly, daily sequence. Why are you using the 4 hour? Then you are not using the monthly, weekly, daily sequence. You are using the monthly, weekly, daily 4 hour sequence. So you ask a question and you answer your question yourself. Okay. So try to do this. Have 2 separate accounts. One to trade the monthly, weekly, daily sequence, and another one to trade the weekly, daily 4 hour sequence. But do not mix them up. Okay. Stick to one sequence, and whatever happens in one sequence should not alter the analysis on the lower or bigger time frame sequence. That's the way to go. That's the way I recommend. Okay, Jay? Good. Any other questions about this one? So Cisco. Let's go to Cisco. So this is what we have. And what was the question, Davi? So here on Cisco, let me do the analysis. Trend line here broken. It was a drop and a rally. So we have an area of supply over there. Monthly out of alignment. Monthly area of demand right now in control. Very wide area. Is that drop rally? When monthly is not 2 to 1, you have to wait for confirmation. So this monthly area of demand is not 2 to 1, probably. That's the one you are referring to, David? No, it's just 1.3 probably. You have to wait for confirmation. Okay? And even if you wanted to, there is nothing really. Let me take a look at, if you are trading the daily sequence, there's nothing to go long at. Let me do this. Let me synchronize this imbalance to all charts so we can see on the daily where that imbalance is. So can anyone tell me, if you are using the monthly, weekly, daily sequence, okay? Monthly, weekly, daily. Imagine you want to set and forget, okay? Can anyone tell me, this is the distal line is here, the monthly average demand, and this is the proximal line, okay? Can anyone tell me if there is a super strong area of demand that scores very high within that price action? Anything? Jay, no. Frederick says poor. Davi says no. So you, Davi, you are answering your own question. So, okay, imagine the level is, it's not 2 to 1, but it's 1.95 to 1. Okay, it's like 0.5 short of reaching a 2 to 1 imbalance. You could say, okay, I'm not gonna be that strict, and I'm gonna tweak the rule a little bit. It's just 0.05. Okay, good. Let's find a level to go long at. If you wanted to, you couldn't, because there's nothing to go long at. Make sense? So that when the level is not 2 to 1, many times you will see that the structure within that bigger time frame imbalance in the lower time frames is not that great. Make sense? Many times it won't. Many times it will be great. Okay? There's a high probability that that level will, the imbalances in the lower time frames will not be that great. Okay, so we can't set and forget here. So we have to wait for confirmation no matter what. So, but imagine this scenario, Devi and Jay and all the others, copy, quite a few people today. So what if we had, okay, let me imagine you are using Photoshop, okay, and you have these two imbalances, okay. Look at the impulses, very strong, ERC candle, gaps. So now use Photoshop and paste it here, okay. Just imagine, use your imagination. Would you be thinking of going along there if you had levels by upside down? Okay, imagine this is upside down. This is demand here, and this here is another demand area. Then you could say, yes, now I can think of going long because there are great levels of demand, sorry, here. So just copy and paste with your imagination that structure into this blue box, okay? So go short on new supply zone is a little bit aggressive. Yes, it is aggressive. So on the daily, we have here peak, well, we have a peak, another peak here, two consecutive peaks. So daily is already out of alignment. But then an area of demand was created, very poor, and another downtrend here is created, okay? And a strong area of demand here with a lot of basing, too much basing. So it's not a good idea. So we are very low in the range within the monthly area of demand right now. Okay, so some longs could start happening. We have a weekly area here, a weekly downtrend. We have a weekly area of supply here, pretty strong, but price fell short of interest into that area, which would have been great for shorts in the weekly sequence. That is the area of supply that was nested right within here. Make sense, Gabby? Yeah. Anyone? Weekly is down. If you are using the weekly sequence, then you can go short. It all depends on the sequence. So we have now the monthly is consolidating. What do consolidation rules say? You can go long at the bottom of the range and you can go short at the top of the range at new imbalances. So are there any new imbalances based on the monthly sequence, low in the range on the monthly? No, there are not. We need new areas of demand on the daily. Are there any areas of demand, any new areas of demand on the daily? Anyone? No, no, so you can't go long. But imagine at the top, price reaches that area almost, okay, here we had like the trend line break and an area of supply, one single candle at the range, at the base, sorry. So imagine that price, it's a pity that price didn't pull back. So imagine the price does this. Okay, so we can start looking for shorts right there at the proximal line, very strong imbalance. Okay, right there. But it didn't do it. So price continued to drop, created another weekly area of supply. On the weekly sequence, we have a downtrend. It would have been great to go short at this area. Make sense? Anwar, I explained it to you. I mean, he's asking, can't we go short at the supply in the daily? We are very low in the monthly range. So you can go short at the daily area of supply. If you're using the weekly sequence, then you can go short because the weekly is down. It all depends on the sequence. Probably price will drop down there to this area of demand or this strong impulse here at the distal line of the monthly area demand, and from there it would be great to have new areas of demand on the daily and the weekly. Okay, down there is the way to start looking for longs. Make sense? It is when you zoom out where it stands that this is the origin of the move, all this. Okay, so probably price will do this. This is the right place to start looking for new areas of demand on the daily, and probably if it takes quite some time to react, okay, then it will do like that and create new impulses on the weekly and a wow on the weekly. Okay. Dabi is asking, in what case do you choose down into distal line or proximal? What do you mean exactly with choosing down into distal line or proximal? I will wait for your to buy farther down. I mean, when you look at the lower time frames, Davi, you see that the origin starts right there. So I'm there. It's there where I'm gonna start looking for longs, unless on the proximal line on the monthly we start creating new areas of demand, very strong areas of demand, but it just didn't happen. So if there is a very strong area of demand like this, so imagine this again. So imagine this bearish impulse, but it is upside down and it is a bullish impulse, then okay, this could be supply, but here could be demand. That could be great to go long, but it didn't happen. Okay, it didn't happen. So we have to wait. You're welcome, my friend. Any other questions about this, Cisco? Okay, good. Frederick, good. Okay, good. So you have any other pair of stock in mind? Because otherwise I'm going to go to the Aussie versus the Danish krone, okay, to explain something here. So what is the trend on the monthly right now? I think that's pretty obvious. Okay, it is down. Okay, good. It's down, so we have a short bias, isn't it? But what do we have here? Don't we have an area of demand in control? Wouldn't it be too aggressive to go short? Too low, isn't it? Low in the range. Good. But what can you tell me about the strength of that area of demand or its weaknesses? Can you tell me a little bit about this area of demand? It's a CP, okay? Can you tell me a little bit more about it? How would you score it right now? If you had to score it from 0 to 5, which score would you give it? 0, 1, 2, 3, 4, 5, or the maximum? Davi said it already. Routine, yes. Anwar. Frederick would say 5. I mean, that would be super strong. Venu would say 5. John 2. Jay would say good. But there is a problem. It's used up. Okay? So we have the level tested here. Almost tested there. Tested again. So every time it's been tested, look, low, lower low, lower low. What does it tell you, my friend? This level is very weak. So if you have something weak, if you are fighting against someone or a situation and you see there is a weak spot, can you be more aggressive attacking your enemy or knowing that it has a weak spot? Can you do that? Would you dare attack an enemy if you know he has a a super obvious weak spot? Yes, you could. Okay, so remember, it is a continuation pattern, bullish continuation pattern with a downtrend. So those CPs are lower probability. And if we add that this is tested and used up, then we can go short aggressively. That's what one of the many scenarios, more than 30, I think, in the advanced matrix rule table, the lesson that is called the advanced matrix. And it says that if the opposing imbalance has been tested or used up, you can be more aggressive shorting in lower time frames. Make sense? This is one of those scenarios. It is tested, used up, you can go aggressively. You can go short aggressively into that area. Okay? So that means yes, no bet on that guy. If the guy is weak, I'm not betting against that guy. For that guy, I mean, I'm betting against him. Okay, so what do we have? Short bias. Even though we have this CP area of demand in control, we can go short, but obviously not on So imagine that you are trading the lower time frame imbalances. You can't just go short on 1 hour, 4 hour areas of demand, supply, sorry. You have to wait for a bigger pullback to higher time frame confluences. It reaches the trend line 20 MA confluence with a slope in 20 MA, trend line confluence, and that's where you have to look for new areas of supply. Makes sense? Right there. Anwar is asking for the rule. Can you repeat the rule? It's in the lessons. I mean, the lessons. There. Let me show you, Anwar. Lessons. It should be the matrix, I believe, the advanced. Here. How imbalances hold against bigger time frame opposing zones, the sequence matrix. And that's a very advanced lesson. And here you have lots and lots of scenarios. Okay. So if the level is tested, or then used up, and if it's used up, then you can go aggressively against it. It's explained there. Okay. And David said that he's got it printed on his wall. Great. I don't. I have it in my memory. I have it very, very clearly. A visual of that matrix in my memory all day long. I mean, I love it. So, short bias, isn't it? So what do we have right now? So this here, let me do this. Let me draw a horizontal line at the proximal line of this used up area of demand and sync it to all charts so we can see where it happened. Okay? Good. So proximal line here, tested. So what do rules say about this after this press action? What do we have there? 1, 2, 3 ESC candles. Now we have a very strong bullish pink candle there. What do rules say that we should be looking to go short? We are waiting for consolidation wave. That happens there. Okay. So after a very strong impulse, rules are super, super clear. I mean, crystal clear. You have to wait for a retracement to the origin of the move. And what do we have there? We have an area of supply responsible for eliminating that area. We had a trend line like this, demand against the trend, and then we have that area of supply created. So it takes 2 weeks, 3 weeks, and hits that area of supply. Is that a valid short according to the monthly and the weekly sequence? We said that on the monthly we were allowed to go short. Do you think this area of supply is aggressive, but do you think it stands, it has higher probability or lower probability of playing out? It has higher, yes, very strong. If you score this level of supply, it gets the highest score. I mean, it's in a downtrend, it's fresh, great base, engulfing pattern, super strong impulse. I mean, what else are you asking for a great level of supply? I mean, it's the maximum. Okay, and also if we start adding confluences, then we have the trend line confluence, and we also have that the monthly area of supply is used up, so it has higher probability of working. Make sense? So if you add all that and put all the time frames together, then you are gonna get, and you ask the oracle of the weekly chart and the oracle of the monthly chart, hey, oracle of the weekly chart, can I go short there? Okay, let's score the level. Let's see what the bigger time frame picture is. Is the opposing area used up? Is it fresh? Is it original? So everything is telling us that no matter what we analyze on the weekly and the monthly is saying shorts. Okay? And David said, and because weekly was on an uptrend, go short distal line. Well, uptrend, there was no uptrend here on the weekly. Weekly was on a downtrend when we reached down there. And on the daily. Okay. So here, so what do we do? If we are using the monthly, weekly, daily sequence, what is the entry time frame of that sequence? Pretty clear. I mean, this is okay, good. So the daily. The daily is the entry time frame. Okay. So what we should do is look for areas of supply nested within that weekly area of supply. Make sense? Shouldn't we be doing that? That's what the rules say. And this trade was called in the community as many others almost every week, okay? Way before it happens. I mean, when price that was down there, I was saying we have to go short there at the daily area supply. I'm not saying, oh, wow, great. This daily area supply over there is playing out nicely. We are making a lot of money. When or after the fact? No. We are saying it way before it happens. Anybody can create a strategy telling you that he's making a lot of money by just showing you after the fact analysis. Okay, so do we have a daily area of supply nested at that area of supply? Look at the crosshair on the daily. Look at that. Do we have one? Yes, we do. So now let's score the level. Is the basing structure good? Not too many candles, not 6 or more. Okay, what about the freshness of the level before it hit that area? So imagine price is right there. It's fresh. What about the strength of the impulse? Great. I mean, fresh, great departure, great base with the weekly downtrend, weekly bearish engulfing pattern, weekly bearish engulfing pattern, weekly downtrend, weekly span control, bearish trend line confluence, 20-minute confluence, used up area of demand on the monthly. I mean, what else do you want to take the short? I mean, I'm asking, what else? I mean, those are the rules. Nobody in the committee is making the rules up. I mean, in real time, the rules are there. You have to wait for price to retrace to the opposing, so the distal line around that area, okay, at the trend line confluence within the weekly area of supply, super strong area of supply, the daily area of supply here. Let's compare this, because this area of supply here, okay, as you can see here, look at that, look, it's not nested within the weekly area supply. This area here, supply, is not nested within the weekly area supply. So look at the crosshair, it's not. It's slightly below. And if you had to score, if you had, imagine there is only one chart, okay? The daily, the weekly and the monthly doesn't exist. So which level would you trade? This one or this one? What about the departure of both levels? Look at this one. Would you take the upper one or the lower one? The highest one. Why? Because this one here only has one ERC candle. Then it bases and another ERC candle. Okay? But this one has 1, 2, 3, 4, 5 ERC candles. So 5 ERC candles versus 1. So this one at the top, since we know now that we have a weekly area supply, this one is nested within the weekly area supply with a weekly downtrend, and the trailing was like this. Okay, this is the distal line of the weekly area of supply, and around here is the proximal line. So that was the trade. Okay. Can you show daily was original level? Was it at original level? This one over here, Davi, was also original. It's not a reaction to a previous level. So it's fresh, original, and I mean, this is like someone said before, Jay, that was the trade, uppercase. Okay, big letters. So that was the level. So you are not sure about that trade. You shouldn't, because it's the set and forget trade. I mean, uppercase, the trade. You wait for confirmation. New area of supply here, created after eliminating this daily area of demand that was responsible for eliminating this weak area of supply. Okay? And if you go to the 4-hour, then you get a brand new area of supply here on the 4-hour. Trend line break, but price never pulls back. Okay? It never pulls back. So that was a set and forget trade at the top, and a confirmation type of trade, and a trade where price did not retrace. Make sense? Any questions about this? Clear, good, perfect. So this is the Aussie versus the Danish krone, okay? So now let's take a look at another one. which is correlated, highly correlated with this one because it is the dollar versus the Danish krone. This one was the Aussie. Now let's take a look at this one. Okay, so the monthly is in an uptrend. Okay, that's what I would say always. We have a valley down there. The trend line is broken. One area of demand created right at the bottom. Bullish engulfing patterns, new impulse, and another drop rally, bullish engulfing pattern, and a valley. So the trend line is adjusted. So we have a downtrend with a lot of room for price to rally to the monthly area of supply. So we have a long bias on the monthly, isn't it? Don't we? We have a monthly long bias. We go long at new areas of demand that score high, eliminate the opposing area, or break the trend line, blah, 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 all that. Okay, so what about the weekly? Okay, we have the weekly in an uptrend because we have that weekly area supply eliminated, but this weekly area demand, then it rallies, retraces, longs, engulfing, engulfing, engulfing. So we have trend line up, eliminating supply, creating new area demand, being respected, and 1, 2, 3, 4 bullish engulfing patterns that can be used as confluence. Don't we have an uptrend on the weekly as well? So we have long bias on the monthly sequence, long bias on the weekly sequence. So now we go and look at the daily chart in a monthly, weekly, daily sequence. So we have one area of demand responsible for eliminating that area. Okay, that was responsible for eliminating this one. Okay, very strong. Okay, but look what happens. What happens here? Let me draw the trend line. Isn't that area of supply super strong? I mean, I believe it is like the strongest one together with this one, and that's it. The strongest one, really. Super strong. But let's put that area of supply here into context. Where is that area of supply here? Let's use the crosshair here. Let's use it. It's right there. Price drops to the 20 MA confluence. It also drops to where? Here, right there. Okay, that was an area of demand down there as well. Trend line break. So we have bigger time frame area of demand. The month is in an uptrend. So since the month is in an uptrend and the weekly was not yet, but it was month is in an uptrend, we are not allowed to go short at daily areas of supply. We're only allowed to go short at new areas of demand. And that's what we have. We have weekly demand in control. We have this area of demand responsible for eliminating this super strong area. Price retraces to that area, then rallies, and then another area of supply is created here. Okay. Test it, used up, drops, and then here, rally, base, rally, to ESC, more than 2 to 1, responsible for eliminating that area of supply. Price retraces to that area, not there, but there, and then from there, it's been rallying ever since. Make sense? Okay, good. Any questions about that? So you have to wait sometimes for days or maybe a week, but since you will be trading many assets, that's the way it is. It's not just a single asset, just the most volatile and more liquid cross pairs and exotics, and then you will start adding some stocks, and you start adding some indexes and futures, bonds if you want, CFD for stocks, so many. Okay, so we have uptrend right now, but on the daily, but what we have here is a super strong area of supply on the daily. Okay, look at that. 1, 2, 3, 4 ESC candles. Price is within that area of supply. So this rally here, we have again This is an impulse that is very strong, but is not responsible for eliminating anything. There is no supply here on the left. This is the strongest supply, so we could see before. There's 4 ESC candle like that. There is no supply here on the left. So this impulse was not responsible for eliminating any opposing imbalance. And here we have another rule. What can you tell me about this impulse? Could we trade on lower time frames within that impulse? No consolidation away, exactly. It's a balance. So again, a daily area of supply and control, a new daily bullish impulse, what was not strong enough to consolidate away. So we cannot go short at lower time frame imbalances lower than the daily. So that means 4 hour. If this here was a valid area of demand, and I would have to do the chain analysis way far back in time, so I'm not going to do that. If this was demand, okay, it was not a valid area of demand. Why? Because this 4 hour area of demand here, look where it is nested, right against a very strong area of supply in the daily and within a bullish impulse on the daily that was not able to consolidate away. Make sense? So there are many rules there telling us that we have daily area supply and control, daily bullish impulse not able to consolidate away, negating the lower time frame entries. Good? All good with that? Okay, good, perfect. If you have further questions, just now is the moment to ask, okay? Let me adjust the trend line here because we have another value there. Okay, good, like that. All clear, great, Frederick. So let's go now to the Aussie versus the Swiss franc, okay? We have on the monthly a downtrend, okay? Why do we have a downtrend? Because we have the monthly area of demand here tested, okay, and used up. Since it was used up, we were able, or we can go short aggressively because we have a used up area of supply, and now it has been eliminated. So we can go short according to the monthly sequence. If we take a look at the weekly, this is what we have right now. Look, this is very similar to the Aussie versus the Danish krone, but the difference is that on the Danish krone, price did retrace to the weekly area of supply, and on the Aussie versus the Swiss franc, price did not retrace to the weekly area of supply. Okay, so we have a weekly downtrend, and in order to go short, we would have been able to go short right here within that level if there is an area of supply nested in the lower time frames on the daily. Okay, so what we have here is, yes, we don't have a close below, but that's not part of the rule. It's just telling us that we are waiting for that. And after a very strong bearish impulse, Tabby and everyone, we are waiting for a bigger retracement. But what happens here is that we found an obstacle, the trend line and the 20 MA. Make sense? And we didn't have that on the Aussie versus the Danish krone. Okay, we did not have the trend line like this. Imagine the trend line was like that, like that. Then we would have the obstacle there, like on the Aussie versus the Swiss franc. So now we have the bearish engulfing pattern. What do rules say about the confluences? We can use the engulfing patterns, the 20 MA, and the trend lines as confluences. We have to wait for new areas of supply of those confluences. Traffic light, exactly. It reaches there, traffic light, it turns red, oops, we can't go long anymore if you are doing longs in the lower time frame sequences, because now it stops and it's probably dropping again, and that's exactly what happened, as mentioned also in the analysis that I'm updating every week. So now let's take a look at the daily. We had that daily area. Somebody asked in the community, I remember very well, that he said, can we go long at this daily area of supply that is super strong? And it's actually very, very strong. Okay? can we go long at that area of supply? Anyone? Yes, no? And if yes, why? If no, why not? Long, short, sorry. Can we go short at this daily area of supply? Super strong area of supply, the one in red. Go short, Frederick, sorry. No, we can't, like you said, some of you, yeah. The traffic light, because the daily is in an uptrend, it's not nested, and all that. So that if since the daily trend line was broken, okay, and the daily is out of alignment, and by the time price reaches up there, it's in an uptrend, then in order to go short as per the realignment rules, it says that if you have 3 time frames, and in this case we have monthly, weekly, daily, if the lower time frame is out of alignment, we can go short again only at the weekly supply zones. So my question is this daily area of supply nested within the weekly area of supply? No, it is not nested at all. If I use the crosshair, look at the weekly chart, look at the daily where it was. The area of supply was a little bit higher right there, and that would have been a set and forget trade. But price fell short of retracement to that area, okay, and started dropping because it found the obstacle. So we can use now, sorry, the 20 EMA trend line and bearish engulfing pattern as confluence. This is a weekly confluence, okay? So if we use a weekly confluence, what we can use also the anti-time frame for the weekly, isn't it? Weekly, what is the anti-time frame for the weekly? 2 time frames lower, 4 hour. Okay? So that was a 4 hour area supply there, price did not retrace, and there we have a very strong area of demand there with a tested weak area of demand. So aggressive shorts are allowed. So we had a 4 hour area supply against tested weak area of demand in a weekly downtrend and a monthly downtrend, and bearish engulfing pattern on the daily, 4 hour super high score, and bearish engulfing pattern and 20 MA and trend line. Make sense? All those confluences helping this short, and obviously the monthly and the weekly downtrend. Okay? Thank you. Darby is saying very important lesson today. So we are using the confluences, the trend, the location, everything. You put all that together and you get an answer, which usually is no trade. But sometimes it is yes, I can trade. And that's where you have to be ready to pull the trigger. Because when it happens, you can have no doubt at all. Make sense? You can't have any doubts. It's just rules say you can go long, my friend. Okay? So now let's take a look at one analysis here before the next one. And this is a stock, HLF, Herbalife. I've known this company for a long time because friends of mine have been selling their products since I was a child, I believe. It's a very old company. Okay? You remember that one, Herbalife? You know that one? HLF. So let's do this. Let's use, first of all, we were on the community. Okay, you can, let me show you this because it is, I like this one because I've been calling what could happen on every single moment, and it happens that it happened exactly as it was said. Every single, it's like we knew what the future was holding for this stock, okay? And it happened exactly as we expected. So we're gonna go over this. So you can see that this, well, if you are a new member in the community, you will see that this is not after the fact trading. This is way before the trade happens. I've been calling, and many other members are helping in this task, calling trades before, way before it happens. Okay, so as you can see here, I posted an analysis on Herbalife on last 22nd July 2019, and I was saying that we could go long here and there. Isn't that? I mean, months before price reaches that area. Okay, people say things about it. Okay, here I'm tagging this guy Benny. Hey, we are approaching that area of demand to go long, my friend. And he start asking about what he doesn't understand about options and all that. And he said, yes, I am long on that one already. But probably he's scared about that. Anyone asking about anyone going long on that one? Well, some people say they are and all that. So now it's reacting to that area of demand as expected, and it's creating a very strong area of demand on the daily as confirmation. Okay? Frederick, Betting on Zero, a good movie about Bill Ackman that shorted HLF. Good. I'm gonna watch it. I'm gonna look for it. Frederick, thanks for sharing. I didn't know that one existed. Okay, so we have a set and forget level on the weekly, monthly, sorry, and also on the weekly. Let me show you here. Here we have the weekly. Here we have the 3 months. I'm going to switch to the monthly. And we're going to see that we have a very strong area of demand on the monthly with 4 ESC candles. Okay, so we have a set and forget. We have a strong area of the 3 months, very high score on the 3 months imbalance, very high score on the monthly, very high score on the weekly. I mean, everything is telling us you go long, isn't it? Everything is telling, yeah, it's telling us go long. Okay, so price starts rallying, and Benny asked, well, price is at the 20 EMA, blah, blah, it's my profit, I'm gonna get out at 3-to-1, but he hasn't reached, his target has not been reached by a little bit. So he's asking, what should I do? Say, close it. 3-to-1, almost close it. Why? Because that's a confluence here. A strong impulse and 20 EMA. Close it because price is going to go back all the way down to the weekly area of demand. Close it. And he did close it. He backed in almost 3-to-1, and he was waiting to go long down there again. And he went down, went long down there again. Price did not retrace to the daily area of demand by a little bit, unless you draw it like that. But it did retrace to the weekly area of demand. Is this a valid trade? Set and forget? Oh, obviously, it's not set and forget because it's a confirmation. But we had a set and forget on the 3 months, monthly, weekly time frames, and now we have a brand new area of weekly on the weekly here. Okay. So what is the anti time frame of the 3 month sequence? The weekly, exactly. So in order to trade the 3 month sequence, we would be using the 3 months chart, the monthly chart, and the weekly chart. The lower time frame is the one that we use as our entry. We can also use the monthly. It's wider. So do we have, since we have the 3 months in an uptrend, 3 months demand in control, 3 months trend line confluence, 3 months 20 EMA confluence. I mean, what else do we want to go long, my friends? What else? I mean, these charts aligning with Saturn and Jupiter. I mean, what else? It's set and forget. That's it. Rules say you can go long. Go long, my friend. So Benny was also having doubts, should I go long here because the monthly did not consolidate away and all that. I was saying, I mean, rules say we have, and this is, he probably he saw this pink candle here and he got scared, probably. Anyone good, okay? But we have a brand new area of demand. Rules say that if we have the 3 months in an uptrend, 3 months demand in control, and also we have the 3 months trend line confluence here, we have the 20 EMA confluence, we also have weekly demand in control, we also have monthly demand in control, both the weekly and the monthly, super strong score, super high score. You cannot think. You cannot, I should not think. You should execute. That's all you can do. Rules say you have to do this, you have to do that. That's it. If you are driving a car and then a policeman stops the car and say, hey, you are not doing this correctly, or you went, you passed this traffic light, and it was red, you get a fine. You have to pay whatever, $200. Fine. Okay, I did something wrong. But rules are what they are. You have to follow the rules. If all these traffic lights are telling you, hey, you can go long because we have 3 months demanding control, trade line confluence, 20 May confluence. We have monthly demanding control, very strong. Weekly demanding control, very strong. What else, my friend? You have to go long. So here we have a daily area of demand and a brand new weekly area of demand created. And it's playing out. Does this weekly area of demand score high? Anyone? Basic structure? Good, great. Fresh. It's not original because it is a reaction to a previous level. Okay? The set and forget level. 2 ESC candles. Okay, good, great. We'll go along. Because rules say that in a 3-month sequence and in an uptrend, we can go long at lower time frame entry, or lower time frame weekly areas of demand. The weekly being the lower time frame. It's a big time frame, but it's the lower time frame in the 3-month sequence made of 3 months, monthly, and weekly time frames. And that's what you have to do. Okay? And what do rules say about this? What am I going to say now, right now? Anybody can type the answer? What am I going to say? After a very strong impulse made of 1, 2, 3, 4, 5, 6 ESC candles, rules say that we should expect what? A retracement to the origin of the move. As simple as that. Those are the rules. They are not made up real time. They are the rules they've been reading for years. You have to do that. Overextension could be said overextension, yes, and we're after 3 ESC candles, we could say it is overextension as well. So we need 3 CPs or more, or several ESC candles. If we have 2 ESC candles, okay, then we can go long at the interchange zone if one time frame lower imbalance is within. So if we have the weekly 2 ESC, we can go long at the interchange zone if there is a daily area of demand. Was there any area of demand at the interchange zone? Anybody? Here is the interchange zone on the weekly, as you can see in the crosshair. No. Since there was no area of demand, you can't go long. As simple as that. Okay? So we expect the origin of the move, and that is exactly what happened. And that is exactly what has been called. Okay? And this can be, what else? What do you think? What else should I do? I am doing the analysis, and I'm telling you that you have to go long at 5, at 4. That price is going to react to 1, and it's going to drop to daily area of demand 3 and 2, where you are allowed to go long. What else should I do to tell you that you can go long? The rules tell you you are allowed to go long. Traffic light is green. You can go long. There's even an arrow there telling you this is going to drop. But this is not telling you that you are allowed to go short. This is telling you that this is what we are expecting. Expecting versus assuming is very different. There's a huge difference between expecting something and assuming something is going to happen. We are expecting this to happen because this is what could happen as well. Okay? That price reaches that area, 50% retracement, 20 MA, and then from there it rallies. And if you are short over here, then you are going to lose. David says something, get another job if afraid of this perfect setup. Exactly. Okay? This is a perfect setup, and it's being described, step by step, and Benny was having doubt about the return to the zone is exhausted and supported, blah, blah, blah. A previous candle, monthly candle didn't close at the engulf. So he's having doubts. Okay? And I say, hey, Benny, you always ask twice the same question before planning the trade, my friend. It's a brand new weekly demand, all 3 months demand in an uptrend. You tell me it's a value trade, respect the rules. If I'm sure, just wait and move on to another one where you have not the slightest doubt. I mean, he was having doubts of the rules, and I was asserting him and assuring him that the rules say you can go long. That's it. Rules are the ones that make the decisions. You pull the trigger, the rules tell you you are allowed to pull the trigger. I mean, and it's written here way before it happens, so there's no doubt about the setup. Set and forget versus confirmation, or set and forget and confirmation if you miss the trade for whatever reason. Okay, make sense? The explanation is clear. Okay, good, great. So now let's go to another one. Let's take a look. Well, this one, another one that was called the dollar versus the Israeli shekel. So this is a type of counter trend trade. Or consolidation type of trade. I'm gonna explain it. Okay, we have 3 months monthly area of demand in control. These, okay, on the 3 months chart, these lines, these blue lines represent the 3 months imbalance right there. The trend line was broken from here to there, okay, and then the area of 3 months is created, okay? So what do rules say about the 3 months sequence? We are allowed to go long at new areas of demand on which time frame? The weekly. Let's take a look at the weekly. Do we have a weekly area of demand here that was responsible for eliminating supply here? Okay, I'm not keeping all the rectangles because otherwise, as you probably know, TradingView gets very sloppy and very slow. So I just have to keep the latest rectangles. So this one area of demand has been eliminated by this area of supply, and super strong. 1, 2, 3 ESC candles, isn't it? Very strong. You could say, okay, I'm going to show short. And it was playing out for a little bit. Okay, but then what happened? It was broken right there. So the impulse responsible for breaking that area was that one. Okay, here it wasn't, because like I said before, and the rules say, the basing structure cannot be responsible for eliminating an imbalance. It is the impulse. So here the origin of the move is right there. So that is the impulse. And what about the daily? What can you tell me about the strength of that imbalance? Anyone? I mean, isn't that the strongest imbalance in the whole chart? Super strong. So that is what I did in the analysis said. Longs are new weekly areas of demand and daily areas of demand. So in this case, price did retrace to the daily area of demand nested within the weekly area of demand, within the monthly area of demand, and within the 3 months area of demand. There were a lot of confluences. So that's the way rules work. Okay? Break trend lines, supply eliminated. Very bad supply. Look at the basing structure here. Okay, very bad. Already tested here. Dropped there. Aggressive trade, short, because we have tested area of demand, aggressive, and then rallies, and it eliminates that area. This aggressive short played out, but we could not go short there again because it was tested, and we are expecting a bigger penetration and or elimination of the imbalance. Make sense, Frederick? So now we have a new area of supply. The daily gets out of alignment. For shorts again, price does not retrace, and it retraces to the very strong area of demand that the daily nested within a weekly area of demand, and it's been playing out ever since, already probably 4, 5 to 1. Good? Those are the rules. Now, let's take a look at another scenario. Okay? Another scenario. And this one is going to be cord, which was also called way before it happened. Okay. When price was about there, you can consult it in the community I was saying, hey, a very strong area of demand on the month has been created, and going long here is the way to go. We need 2 ESC candles. What do we need in order to uh, score a level as strong? We need 2 ESC candles, isn't it? At least. And these accomplishing a 2-to-1 imbalance. Those are the rules. What else do we need in order to, what kind of structure could an imbalance look like instead of 2 ESC candles? Anyone? You are seeing it on the screen right now, so you should be able to know. Wider candle than the average. So, if you look at the average ESC candle here on the chart, okay, ESC, the average, that's the average, okay? Isn't it like twice the width or more? It is. So it's 2-to-1 or one candle that is twice or wider than the average candle. And that's what we have right there. Make sense? All good? So we have a very strong imbalance on the monthly. We can go long. Now let's take a look at the weekly. I believe the weekly has even a stronger imbalance. I mean the strength of the impulse. Look at that. We have a trend line, break, probably supply here on the left eliminated, and we have 1, 2, 3 ESC candles. Then we have now another one ERC, only one, and then it hits after a very strong rally on the monthly. We can see it. We are expecting a retracement to the origin of the move, and gaps as well. And we're set, gaps and gaps. Very strong. This area of demand on the weekly is nested within the monthly area of demand as well. Very strong impulse. It took like a couple of months for price to retrace, and there we had the long. And some of you are already long. I believe one of them is Lion 89. Okay, you go long there, and price is rallying, and probably now price will start declining because there's a very strong bearish impulse over there. And on the daily we have, it has some room to reach that area on the daily, very strong, where shorts will be possible again in confirmation. So that's the kind of imbalance that we are looking for. We have to look for very strong imbalances, and if they are nested and uptrending, even better. Make sense? This is the kind of imbalance you have to look for. I mean, to increase exponentially your the probabilities of the trade. Confirmation, David is asking confirmation on the daily on 4 hour. Depends. It depends on your sequence. If you're using the weekly sequence, then 4 hour areas of demand. If you're using the monthly sequence, then daily areas of demand. It depends on your sequence. But this one looks like the strongest one. And let's do the chain. We have here two peaks, two valleys, sorry. So we have two valleys. Don't we have that area of supply tested here, used up? So this here is the one responsible for eliminating that one. Make sense? That's how we use the chain analysis. All good? Not good. Perfect. That's corn futures. So now let's take a look. Jay's asking, sorry to ask this again. I got confused with this. So if I'm using the monthly, weekly, daily, when can I use 4 hour? You can use 4 hours you want. I mean, the lower time frame you use, the more noise you're gonna have. But the 4 hours used in the weekly sequence is the anti time frame of the weekly sequence. You can also use the 4 hours confirmation in a monthly sequence, but you are adding one more time frame. So I always suggest that if you're using the 4 hour, you should be trading a completely different live account. You should be using the weekly. You should have two accounts, one to trade the monthly sequence and another one to trade the 4 hour sequence. When you see a 4 hour area supply, open the trade on the weekly account, not on the monthly account. Okay? Also, by doing that, you will have two accounts. You will have the monthly sequence account, the weekly sequence account, or probably even lower time frames. So when you trade a 4-hour area of supply or demand, then you plan it on the weekly account. Then on the daily, or you plan it on the monthly account. Okay, so when you look at the stats, okay, of that account, the winners and the losses, okay, then you will know how many trades have worked on the 4-hour and on the daily without influencing each other. Make sense? And where should not be a demand area at daily at bull engulfing candle? Where? Because there are several bullish engulfing candles on the daily. I don't know which one you are referring to and where. So there is demand down there as confirmation because you have the trend line break. Over there we have this trend line break, okay? After two peaks. Here we have peak demand here. Exactly, that's the demand area. That's confirmation, but price never pulled back. So the entry was on the weekly and the monthly. And here on the left, here, okay, good. Did we have a set and forget entry on the daily? Can anyone tell me by looking at this? Was there an area of demand here? Yes, everybody's saying yes. Why? Because we had this is a peak, drop, rally based drop. So that's the trend line break. So we had the bullish engulfing pattern. Okay. Can you score this level? Basic structure. Good. Very strong impulse with a gap. Okay. So that's the pullback, my friend. Anwar, Dabi, that was a pullback there. You said that it was a. I guess you were referring to this daily area of demand. That was a pullback. So that is the daily area of demand. So price, this is a set and forget type of trade. We can go long at the weekly area of demand. We can go long at the strong area of demand on the daily. Nothing to do with the, remember the Cisco monthly area of demand where we were looking at the daily here? Okay, there was nothing to set and forget. Can you see the difference now between this daily, between this daily area, this daily price action here nested within the monthly area of demand and the one on, where was I, on corn? Look at that. We look at the difference. It's pretty obvious. Okay, so this is very strong. The one within monthly area of demand on Cisco is nothing strong. So you cannot set and forget. The difference between set and forget, setting and forgetting your trades or not is the quality of the level itself. Okay, so that's core. Scoring is critical, as Anwar said right now in the chat box. So let's take a look now. We have time for two more. So let's take a look now at Snapchat, probably at Twitter. Okay, Snapchat. Why? Because here, let's start with the 3 months chart. What do we have here? We have 3 months area of supply and control, haven't we? Yeah, we have 3 months area of supply and control. So what do rules say about this? That in order to go short, we need what in the 3 month sequence? We need what here? Anybody? What time frame do we need? Exactly. Weekly supply zone, J. Exactly. That's what we need. So we need a weekly area of supply because the weekly time frame is the anti-time frame for the 3 month sequence. So 3 months. So what can anybody tell me what I'm about to say by drawing these 3 SE candles? Exactly. Jay said that. Overextension. Okay? overextension. After a very strong impulse made of 3 ESC candles, okay, if we have 2 ESC candle, we can go short at the interchange zone in one time frame lower on the monthly. Imagine that we only had 2. Okay, so if there was a monthly average supply there, we can go short if there is a monthly average supply. Okay, but since we have 3, rules say that we should be thinking of this, waiting for a pullback to the origin of the move. So counter trend longs are possible if the middle time frame of the 3-month sequence, which is the monthly, gets out of alignment. Those are the rules for counter trend. We need overextension, middle time frame out of alignment, and all that. Okay? So now that we are within the monthly 3-month area of supply, we can go and look for new areas of supply on the weekly. So let's go to the weekly. Okay? We have here a valley, drop, rally. This is a base, a CP. So here we have another valley, don't we? So trend line, drawn, and broken. Brand new area of supply created on the weekly. So rules are giving us a green light on shorting Snapchat. Make sense? It's being created. If we get another ESC candle there, it will be even greater. It will be better for shorts at the top. No thinking like Davies. Is Davi or David, or how should I call you? Danny, or Danny, David, or David, I don't know. David or David? David is in Spanish, David is in English. Okay, no thinking. What about consolidation away? It's already consolidating away here, Anwar. At the end of this week, this candle will consolidate away. Davi in Brasilia. Okay, Britinho. Okay, good. Consolidation away is happening right now. We need just, today is Wednesday, 2 days left for this candle to consolidate away. Make sense, Anwar? I'm just projecting what is probably going to happen. That's what you have to think. And RR and all that, yes. Okay, so on the way down, we have had new areas of supply created on the 4-hour, but not a single pullback. So now we are expecting for the pullback. There is a daily area of supply here created already, responsible for eliminating demand here. Okay, so it all depends on the sequence that you are using. But since you know that the top time frame sequence on the 3 months is supplies in control, brand new supply created on the weekly, you are not allowed to go long. And even if you wanted to, there is nothing of real quality here. The only one was here with a very strong gap, played out for maybe 2-3 to 1, but very aggressive. Okay, and that's it. Now shorts as Davi is mentioning. So shorts is the way to go right now on Snapchat. Make sense, everyone? Any questions about it, Frederick? Or Gerard, who is there, not saying anything? John, Mary, Benu? Okay, good. Perfect. So now let's take a look at another one, Twitter. We need a meeting in the US. I would love to. I would love to. I never tried there, but I would love to have a meeting in the US. But the US is very big, David. East Coast, West Coast, the middle, North Carolina. That's great. I have some friends over there. Okay, good. So let's take a look at Twitter. Okay. Again, Twitter has 3 months area of supply in control. When we have several engulfing patterns, this is the way to draw the level. We don't draw the level like that. Okay. Price usually rallies deeper into the level here or even higher. Okay. So it hits the 3 months area of supply. So now it is like Snapchat. We are within a monthly area of 3 months area of supply, brand new area of supply created on the weekly. You see, Anwar? Already 2 to 1 probably. Okay? And daily supply in control. So remember what I said before. Remember what I said before? Test it 2 times? No, Anwar. Test it only once. Being tested a second time. There's a huge difference between having a tested imbalance or once or twice or being tested. Is being tested. Because in order to have an imbalance test, what do we need in order to consider an imbalance as tested? Anyone? Rules are very clear about it. Or I believe they are very clear. Exactly. Davi said it. We need consolidation away on the test. So once price hits the area, we need a candle staying away from the imbalance, consolidating away. So we consider that as a first test. So in order to have this 3-month area supply as tested for a second time, we need another candle staying away, consolidating away from the 3 months, and it is not happening. Okay, so we say that the level is tested and is being tested a second time, is being used up, which is very different to be used up. One thing is in the process of, and another thing is it has already happened. It is a fact. Make sense? Good. Perfect. Davi, Anwar, J. Good. So, didn't like I said before on which one was it? Snapshot. Didn't I say a new area of supply is weekly supply is being created, and new area of supply is being created as well. See, but price didn't pull back. But on Twitter, the pullback happened. On Snapchat, it didn't happen. Make sense? So short bias on Twitter as well. Okay? So we have time for one more. Okay? Let's take a look at, okay, this one, Schwab. On Schwab. I was short on this one. Close it around here for 3-1 on options. Gave me 3-1 around here already. So, in this one, what happened here? We have 3 months demand eliminated, isn't it? So 3 months out of alignment. Can you look at this coding of the level? The basing look not good. I mean, bullish pink candles, only 1 ESC candle, basing not that great. But still, it played out a little bit, okay, on the lower time frames. So 3 months eliminated, we can go short. And look now, let's take a look at the monthly. Monthly demand eliminated, okay? Bearish engulfing patterns, monthly downtrend, 20 EMA, short bias, isn't it? Shorts. We can use the bearish engulfing patterns as confluences for shorts. Now let's take at the weekly. And look at the weekly. We had this. Why is this supply? Because we had trend line broken. Chain analysis. Make sense? New supply formed. Can you please score supply? Basing? Good. Departure? Good. Before price reaches the area, it was fresh. Good. I mean, what else do you want? Consolidation away? Great. Textbook. Okay. Monthly, remember, downtrend. Trend line confluence on the monthly. 20 MA confluence on the monthly. Remember? Here. Okay. So short bias. Price retraces that area and drops strongly. Okay. Short. That's the only way to go. We are having demand eliminating on the monthly, demand eliminating on the 3 months chart, demand eliminating on the weekly, very strong weekly air supply. We have the weekly trend line confluence, weekly supply zone confluence, very strong impulse, great base, strong departure. I mean, I just could keep on adding more confluences. I think there are no more, but it's like, hey, I'm craving for somebody to pull the trigger and short me. That's what Schwab is calling. Short me, my friend. Make sense? Dabi is saying, after this great webinar, fill out trading. Yes. So now, let's take a look at another one, because Schwab is got other competitors like E-Trade, like Interactive Brokers, like TD Ameritrade, and all that. So let's take a look at Interactive Brokers. I think it's IBKR. Yes, Interactive Brokers. Let's see what Interactive Brokers has to tell us. Looks like the same thing. Let's take a look at the 3-month chart. What am I going to say? Anyone? I mean, this is so obvious. I love the obvious things. After a big rally, overextension, origin got to move. Right there, isn't it? Very strong impulse. So, origin on the way down. Imagine that you are trading, you have a monthly account, a monthly sequence account, a weekly sequence account, or a 3-month account. You have 2 accounts. Okay, on the 3-month sequence, I'm going to go long there. But on the monthly sequence or the weekly sequence, I'm going to go short. But do not mix them. Just trade each sequence on its own and unique and separate account. Okay? So, longs down there. Let's take a look at the monthly. Okay? This looks very, very similar to the Schwab. Okay? With the difference that on Schwab, we have several. Here we also have a bearish engulfing pattern, but here we don't have. We have here, we have the 20 MA confluence and all that. Demand eliminated. So short bias, monthly sequence. Longs down there at the monthly area of demand, nested within the 3 months, 6 months area of demand, because here on the monthly we have 3 months and then 6 months. You see, 6 months area of demand. Probably 12 months area of demand. So we have 12 months demand zone, 6 months area of demand nested, 3 months demand area nested, monthly demand nested. So I'm going to ask you again, what else do you need in order to go long? What else? That doesn't mean this trade is going to work. This could be a loss. Okay? But rules say you can go long. Yes, you can go long. Go long. That's it. You don't need permission from me or from anybody else. You don't need permission from invested.com or any other website that is telling you about the earnings fundamentals and the last quarter was not that great, blah, 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 or that now Interactive Brokers is not going to charge any commissions on some trades like E-Trade and Schwab and others. So they were saying that the other day. I read an article, that's why price is dropping. No, price is dropping because it's overextended, and after a very strong rally, all those investors that took the trades are closing for profit, are selling to close for profit. As simple as that. Doesn't that look more logical to you? I mean, like, if you buy here, it's super expensive right now, you just back in profits. You are making a lot of money. Close it, my friend. You close it, price drops. As simple as that. Okay, reading Davi, good. That support line pulled you out from shorting? Which support line? Because I'm not. You mean this here, the low here? I mean, after strong impulse, short at the top. The short is at the top. If this daily area of the money is eliminated, then shorts at the supply area. If that will be supply, if this one is eliminated. Make sense? Good, perfect. You shouldn't be going long against a fresh area of demand on the weekly, my friend. Okay? Very strong. Okay? Good. So now a new area of supply is being created on the weekly chart here, around there. If there is a low low printed, which is probably going to happen. So short will be possible on the monthly and the weekly sequence until price reaches the monthly, 3 months, 6 months, 12 months areas of demand. Make sense? Anyone? All good? Okay. But it's trading, like I always say, should be boring. Once you know the rules, just apply them and you are going to get an answer. So 3 time frames, the sequence, blah, 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 score the levels. Can I go long? Yes. Can I go long? No, because weekly, monthly supply are in control. So I need at least a time frame as bigger as the one in control in order to plan high volatility trades, unless that bigger time frame is tested or used up, like we saw on these forex cross pairs. If the demand or supply is tested several times and used up, then you are allowed to go short in lower time frames than the time frame that is in control, because it is aggressive trading into used up weak imbalances. Make sense? And once you repeat that to yourself over and over and over, then it will become second nature. And if you use the community to post your trade and do the analysis, we will all help each other by posting potential setups like Benny and Joseph and others and Kiwi Forex are doing. But most of you, unlikely, they're just luring in the dark, reading, or I don't know what you're doing. Maybe you don't like to contribute or writing in the forums. But that will help you reinforce the rules on your trading. It helps a lot. It helps a lot. And I believe that's everything for today. Yeah, there will be another webinar soon, probably in next week or the next one. Okay, probably once every 2 weeks, something like that. Okay, Anwar. And that's everything. Benu, welcome to. Thank you everyone for joining the webinar. Have a good night. I'm going to close now the chat on the webinar, and I will be uploading the webinar to the Vimeo account so I can share it with you. You can watch it again and the others that could not attend. Have a good night. Bye bye, everyone.